You pay your bills on time, you show up to work, you don't overspend, and yet somehow, somewhere in the background, a number you can't see is deciding whether you deserve a home, a car, or even a job. And if that number is wrong, even by 100 points, you'll pay $250,000 more than someone living the exact same life as you. Before we go any further, this is Donki. If you want calm, honest explanations about money, you're in the right place. Here's what nobody tells you. Two people can earn the same salary, live in the same neighborhood, drive the same car, and work the same hours. But one of them will hand over $250,000 more to banks, insurance companies, and landlords over the next 30 years. Not because they're irresponsible, not because they made bad choices, but because a 3-digit number attached to their name is 640 instead of 760. And here's the part that makes it worse. Most people don't even know what that number measures. They think it's about responsibility. They think it's about trust. They think it's about whether you're a good person who pays their debts. But it's not. It never was. The credit score doesn't measure how responsible you are. It measures how profitable you are. And once you understand that difference, the entire system starts to look very different. Let's start with something simple. You want to buy a house. Let's say it costs $400,000. You've saved up the down payment. You have a stable job. You've never missed a bill. You walk into a bank and they pull your credit score. If it's 760 or higher, they offer you a 6% interest rate. If it's 620, they offer you 7.5%. That's it, just 1.5% higher. On paper, it sounds like nothing. But run the math over 30 years, and that 1.5% costs you $120,000 in extra interest. Same house, same grass, same roof. But you pay $120,000 more because an algorithm decided you were risky. And here's what makes it even stranger. That $120,000 isn't sitting in your account. It's not building your retirement. It's not compounding in the stock market. If you had invested that money instead, it would have grown into $500,000 by the time you retire. So the real cost isn't $120,000. It's your entire financial future. And this isn't just about mortgages. Your credit score is now being used to decide things that have nothing to do with borrowing money. Auto insurance companies look at your credit score and use it to set your premium. They've decided that if your score is low, you're more likely to crash your car. Even if you've never had an accident, even if you've never gotten a ticket, even if you drive like you're transporting a wedding cake on your dashboard. If your credit score drops, your car insurance goes up. In some cases, a person with a clean driving record but a 600 credit score will pay double what someone with a DUI and an 800 score pays. Let that sit for a second. The system trusts a drunk driver with good credit more than a safe driver with bad credit. And it doesn't stop there. Landlords use your credit score to decide if you can rent an apartment. Utility companies use it to decide if you have to pay a security deposit. Even employers, especially in finance, government, and defense, check your credit score as part of a background check. You could be the most qualified person for the job, but if you missed a few payments 3 years ago during a medical emergency, you might get passed over. The score has quietly mutated from a tool banks use to assess lending risk into a universal judgment of your value as a person. It now decides where you live, what you drive, and whether you can work. And here's the most twisted part. The score doesn't measure wealth. You could have $10 million in cash sitting in a safe. But if you've never taken out a loan, you might have no credit score at all. To the algorithm, you're invisible. You don't exist. On the other hand, you could be broke, living paycheck to paycheck, drowning in minimum payments. But if you keep borrowing and paying it back just in time, you're a superstar. The system rewards participation in debt. It punishes people who use cash. It punishes people who pay off loans early. Have you ever paid off a car loan and watched your credit score drop? That's the system telling you the quiet part out loud. We liked you better when you were paying us interest. When you stop being profitable, your score goes down. It's not a reputation system. It's a loyalty program for people who stay in debt. Now here's something most people don't know. The credit score, the FICO score, was invented in 1989. That's younger than most of the people watching this. Before that, lending decisions were made by humans. Loan officers would sit down with you, look at your income, ask about your job, and make a judgment call. That system had massive problems: bias, racism, favoritism. But the new system didn't fix bias. It just made it invisible. It replaced human judgment with an algorithm that nobody can appeal to, nobody can argue with, and nobody fully understands. And the algorithm was designed for one purpose: to standardize risk so that debt could be packaged, sold, and securitized. It wasn't designed to help you. It was designed to help banks sell your loan to someone else. And in the process, it created a caste system. People with high scores get low rates. People with low scores get punished, not denied, because that would leave money on the table, but charged extra for everything. It's an invisible tax. And the people paying it often don't even realize it's happening. So here's the question that should be bothering you by now. If the credit score isn't measuring responsibility, and it's not measuring wealth, and it's punishing people who pay off debt early, what exactly is it rewarding? And more importantly, who benefits when you don't understand the answer? The answer is simpler than you think, but it's going to sound cynical. The credit score rewards one thing: predictable profitability. It's not looking for people who are responsible. It's looking for people who will borrow money, pay it back slowly, and never stop playing the game. The ideal customer from the bank's perspective isn't someone who pays off their balance every month. It's someone who carries a balance, makes minimum payments on time, and keeps the interest flowing. That's why paying off a loan early can hurt your score. You stop being useful. That's why having no debt at all makes you invisible. You're not playing. And that's why the score is built the way it is. Let me show you how it actually works. 35% of your score is payment history. This one is simple. Did you pay on time or not? One missed payment, even by a day, can stay on your report for 7 years. But here's the thing. This category doesn't care if you paid the full balance or the minimum. As long as you paid something, you're good. The next biggest chunk is 30%, credit utilization. This is the ratio of how much credit you're using versus how much you have available. Let's say you have a credit card with a $1,000 limit and you spend $500. Your utilization is 50%. The algorithm hates that. It thinks you're desperate. But if you call the bank and ask them to raise your limit to $10,000 and you still spend that same $500, your utilization drops to 5%. The algorithm loves that. You didn't change your behavior. You didn't pay off any debt. You just changed the denominator. This is a game of optics. The trick is to look like you have access to endless credit but have zero desire to use it. You're supposed to appear rich and uninterested. Then there's length of credit history, 15% of your score. This is why closing your oldest credit card can hurt you, even if you don't use it anymore. That card is proof that you've been in the system for a long time. It's like work experience on a resume. Delete it, and you lose years of credibility. And here's where it gets even stranger. There's a hack that wealthy families use to pass down good credit like an inheritance. It's called the authorized user trick. A parent with a perfect 800 credit score adds their 18-year-old kid as an authorized user on their credit card. The kid never gets the physical card. They never spend a dime. But the entire 20-year history of that card, every on-time payment, every low utilization ratio, gets copied onto the kid's credit report. The kid wakes up on their 19th birthday with a 780 credit score. They walk into a dealership and get approved for a 0% interest loan. Meanwhile, the kid whose parents have bad credit starts at zero. Or worse, they inherit bad financial habits. They walk into the same dealership and get hit with a 15% loan. This is how inequality gets baked into the system without anyone saying a word about it. It's invisible, it's legal, and it compounds over a lifetime. Now, what happens when things go wrong? What if you have errors on your credit report? This is where the industry of credit repair comes in, and most of it is a scam. But the mechanism they use is real. It's based on the Fair Credit Reporting Act, which says that any information on your credit report must be 100% accurate and verifiable. If there's a mistake, even a small one, like the wrong date or a misspelled name, you have the right to dispute it. And if the credit bureau can't verify the debt with the original lender within 30 days, they have to delete it. So here's what happens. Credit repair companies flood the bureaus with disputes, knowing that many old debts can't be verified anymore. The original lender sold the debt, the paperwork is messy, the trail is cold, and the bureau has 30 days to respond, or the item gets removed. It's not about proving you paid the debt. It's about proving the paperwork is incomplete. It's a legal loophole, and the wealthy use legal loopholes every single day for taxes, for trusts, for estate planning. You should use them for credit. Now, some of you might be thinking, why play this game at all? Why not just use cash and opt out? And look, I respect that. If you can buy a house in cash, do it. If you can live your entire life without borrowing money, you've won. But for 99% of people, that's not realistic. You will need a mortgage. You will need insurance. You will interact with landlords, utility companies, and employers who all check this number. Living in modern America with a 0 credit score is like playing life on hard mode for no reason. You'll pay higher deposits. You'll get denied for rentals. You'll face friction at every turn. The pragmatic move isn't to boycott the score. It's to manipulate it, treat it like an annoying video game you have to speedrun so you can get the rewards and move on. So here's how you do it. First, automate everything. Set every bill to autopay at least the minimum amount. You can pay the full balance manually later, but the autopay ensures you never miss a payment due to forgetfulness. A single 30-day late payment is a stain that lasts 7 years. Don't let a stupid mistake cost you $100,000. Second, play the credit limit game. Every 6 months, ask every credit card issuer you have for a limit increase. Tell them your income went up. Most of the time, this is a soft pull. It doesn't hurt your score. By constantly expanding your available credit, you're padding your utilization ratio. You're building a bigger buffer so that even if you have an expensive month, your score doesn't tank. Third, never close your oldest accounts. If you have a dusty old card from college that you never use, keep it open. Buy a pack of gum on it once a year to keep it active. That card is an anchor. It proves you've been in the system for a long time. Closing it deletes that history and lowers the average age of your accounts. And finally, check your credit report regularly. 1 in 5 reports has an error. A bill you already paid. A debt that isn't yours. A typo that's dragging your score down. Dispute every single error you find. The bureaus are required to investigate, and if they can't verify it, it gets removed. This isn't about gaming the system. It's about refusing to pay the invisible tax. You're not trying to impress the bank. You're trying to keep your money. Because here's the truth. The credit score isn't a measure of your character. It's not a reflection of your morals. It's a tool designed to extract wealth from people who don't understand how it works. And the banks are counting on your ignorance. They're counting on you accepting the 12% loan because you think that's what you deserve. They're counting on you not asking questions. They're counting on you feeling shame instead of anger. But once you see the system for what it is, once you understand that it's not about fairness, it's about profitability, you stop playing defense. You start playing the game. Deliberately, you stop letting a 3-digit number decide your financial future, and you take back the $250,000 that belongs to you. That's it. That's the video. If this made something click, share it with someone who needs to hear it. The system works best when we don't talk about it. Thanks for watching. I'll see you in the next one.